to investors literally all over the world. VectorVest's reach is literally across the globe for over a decade. And prior to joining VectorVest, and this is really kind of the cool thing about Brian, you got a lot of people who understand the markets and they get it, but they have a hard time translating that to others. Well, Brian actually was a public school teacher before joining VectorVest, so he's been able to kind of take that teaching knowledge along with his investing knowledge, which makes for a really good experience for all of you guys here in the room today. So we're real excited to have Brian here. I'd also like to especially thank Angel. She was instrumental in getting this set up. And so real quick, one last question before I turn it over to Brian. How long have you guys been trading? Just type in how many years you guys have been trading. Just kind of curious to see what the experience. Okay, 3 years, 1 year, 4 years, 10 years, 20 years, 1991, 5 years, 13 years, 8 months, 4 years, well, 40 years, there you go. None yet, 15, so good. So we've got, as you can see, it's 2 days, there you go, Mr. Gambino, 4 years, 10 years, 6 to 7. Well, here's kind of the interesting thing, a lot of us think about, and I think you see so many new traders based on technology and the internet and the way that costs have come down for individual traders. VectorVest actually was founded 26 years ago, and so you might say, I didn't even know they had charting programs that long, and they were definitely one of the first. And so they've been through multiple markets. It's a powerful tool. I know we've got a lot of guys in here who actually use it. And so Brian, we appreciate you being here, appreciate Angel being here, and I will go ahead and turn things over to you.
Great, thank you very much. I'm excited to be here. Thanks, Morgan. This is Brian D'Amico talking, in case you didn't know. Just to make sure you can hear me okay, just in the chat box, just say, hey, I can hear you loud and clear. Maybe even type in what you're looking forward to the most out of this presentation. There's a bunch of presentations throughout the day today. Maybe just type in what you're looking forward to the most out of today's session. All right, so it looks like I'm getting a lot of loud and clears. Loud and clear sounds good. Thanks, Rocco. Thanks, Glenn. Pessy, hopefully I pronounced that correctly. Yes, hello. Hi, Carlos. Looks like learn to trade well. Michael, good. Lots of help. Good. How to make money. Good. Easy strategy. To day trade. Actually, this is one of the things we're going to look at is not necessarily day trading, though, getting in and getting out in the same day. But some of the techniques as far as market direction, you can definitely peel from some information there. Nilesh, hopefully I pronounced your name correctly. Is it worth it for a small investor? Definitely, John. Definitely. Stop losing money, Giselle. Good. And let's see. You can hear me clearly, Darnella. Great. Looking forward to learning more about the VectorVest program. Great. Help with trading better tomorrow. Great. You were getting VectorVest in the 1990s, Al. Great. Great to have you here. Raiko, hopefully I pronounced that correctly. Buy signal. Great. Looks like we got a couple of minutes before the official start time, so I just want to make sure everybody has a chance to get in. So it's good to meet all of you who are here early and kind of get going a little bit, so you kind of know what's going on before we actually officially get going. Looks like we have about 2 minutes before the official start time. So again, if you're just joining us, what we're doing is in the little chat box, just type it in, what you're looking forward to the most out of this particular session. I already saw that we have a huge variety of where you're from. It's great to see people from all over the world joining us today. Dave says he's 5 years using VectorVest. Great. Nilesh says yay. Good. Good to have you all here. All right. And I saw a lot of you have a wide variety of experiences as well. Some of you are new. Some of you are been trading for like 40 years, I saw. MS, 3 months using VectorVest. WS says, how does it work? Great. We'll get into that. We're actually going to dive in just about 2 minutes here. So that way everybody has a chance to jump on board and don't miss anything. Joan says, say hi to Bart for me. Actually, I think he's just pulled into the office about a half an hour ago, so I'll be able to say hello. For those of you who don't know, Bart that's the first name of the founder of VectorVest, so Bart DeLito, not Bart Simpson, by the way. So I'll go over and say hello to him for you, Joan. All right, so hopefully you grabbed a couple. By the way, I'll mention this again when we officially get started, but be sure to grab some, pen, paper, something to take notes on. Get a drink. I've got my bottle of water. I'm trying to be a little healthier, so I got a drink here. Stand up, kind of stretch, get ready, because we got a ton of full content. We should go for the full hour. maybe an hour and 5 minutes if you don't mind. So we might take a few extra minutes. So it's great to have you all here. I'm going to take one quick sip before we actually get going here. All right, looks like we got less than a minute according to my clock, and then we'll get going. All right, MS, I just recovered. Oh, great. I think I misunderstood it when you first typed it in. Just recovered the investment that you, for VectorVest. Great. So you basically paid for your subscription is what I'm taking that as. All right. Yeah. Nice, MS. Yes. All right. Well, looks like it's right around 11:30 on my clock, so let's officially get started. So again, I want to thank Morgan for inviting us here today and for having me here. Thank all of you for joining us. I know we're going session after session, so it's great to have you all here. So I really feel you're going to get a huge amount of this session out of the session that we're going to do today. You're going to get, I'm going to give you information, especially for traders who might be struggling. I'm going to give you information that I feel will make a huge difference in your trading account. All right, so before we get started, let me go through, show you how to get the most out of today's session. I like to call them the 3 gets. All right, so 3 gets. Get number 1 is get pen, paper, and a drink. You're definitely going to want something to write on, write with, and something to drink in case you get thirsty. All right, so that's first get. Get number 2 is get rid of anything that might distract you. I know in this age of technology, we got beepers, buzzes, flashes. So if you've got a phone, just turn the ringer off for now. If you've got kids, lock them in the closet or something. Just pay full attention because we're going to be covering a ton of great information today. So that's get number 2. And get number 3 is just get in a state of learning, especially today when there's a lot of things going on in a full day of presentations. Just get in that state of learning. If I were to tell you that over the next 60 minutes, you're going to learn something that might take you from maybe being frustrated and maybe losing money to where you have a plan to be successful, what would you do? I mean, you'd probably be ready to go, right? All right, so those are the 3 gets. Like I said, I'm excited to be here because we're going to be covering basically the common reasons people lose money and hopefully plug those holes for all of you. All right, and number 2, we're going to go right into the 5 steps to right the ship and consistently grow your portfolio. All right, Adelphi, yes, don't actually pause it. It was just a metaphor? So let's not do that, but basically you get the idea. Just let them know you're going to be busy for the next hour. All right, so let's get right to it. Just so you know, you might have already, I think Morgan already told you this. I used to be a 3rd grade teacher, so once in a while I might do a corny joke or something, or you'll see some goofy slide on there. That's just my personality. Hopefully you're okay with that. If not, you might want to head out now. That's just the way I am. And second thing is, I'm going to give you everything I got. I'm going to give you everything I can for the next hour, and at the end, I'm going to show you a system where you can take everything that we covered today and plug it right into your own investing. So if you're okay with all those things, my stipulations basically in the chat box say, hey, good with me, I'm good to go, something like that. Let me know you're ready to go. Haley says, locking the kids in the closet sounds like bad advice at the start. Oh, give me a chance, Haley. So if you're ready to go, let's go. All right, good. Yeah, so let's go. Good to go. All right, great. So for the next hour, all I ask, pay full attention, follow along, and if I ask a question, just shoot your answer into this little chat box. It looks like we can all see everybody's answers there. All right, so I'm going to have to modify a little bit about what I do because you can see all the posts from other people. All right, so I like to make this a conversation. I don't like to just sit here and talk to the wall, so I like to have a conversation back and forth. So let me tell you a little bit about the journey for today. What we're going to do is very simple today. The journey for today is I'm going to show you what not to do. Then I'm going to show you what to do and how to do it. All right, so I really feel you're going to get such a huge amount out of today. Like I said, it could make a huge difference in your trading account. And my big promise for you guys is that if you do follow those 5 steps, you will never see your portfolio collapse again. It will be impossible, totally impossible for it to collapse again. And you'll have frequent opportunities for substantial gains. And of course, by sticking through to the end, you'll see exactly how it's done. All right? Good. Now, if you have been struggling, I hope this is the webcast that's really going to kind of kick you in the backside and get you going. Right, now, personally, I did struggle for a while. Like I said, I started learning about the markets 12, 13 years ago. I actually thought it was going to be super easy, right? I got a little calculator out. I actually sat down in my living room and I was hitting like 100% and then like what times or equals. And I'm just saying how long is it going to take me to become a millionaire if I make 100% a year? Well, it didn't take too long. Basically, the market taught me a huge lesson. Basically, squashed me. I was able to quickly lose most of my initial investment. I think I did every possible thing wrong. I sold stocks and then watched them go up. I bought stocks and then watched them go down. I held on to losers and watched them become even bigger losers. I mean, it was a nightmare. All right, but there were 3 events in my life that really turned things around. First, I met Dr. Bart DeLito, who some of you in this webcast already said that you knew. He taught me about stock market trends. All right. I also met a gentleman named Kevin Crow, who taught me about trading discipline. And the third thing was I read a book called Trading for a Living. And if you haven't read it yet, it's a great read. I recommend you get it. It's by Dr. Alexander Elder, and that taught me about trading psychology. And those taught me what it takes to be successful in the market. It gave me the tools and the knowledge to have a system which was up over 40% in 2013. I'm excited to be able to share those techniques with you today. In fact, if you stick through to the end, what I'm going to do is I'm going to give you a template that you can use to create your own plan. All right, it's the same template I use to create mine. That's my gift to you, freebie to everybody for being here today. At the end, I'll give you that link. Sound good? Everybody likes free stuff, right? That link. Remember, if I ask you a question, type it in the chat box. All right, so let's get going here. This webcast is about you. I told you a little bit about me. This webcast is about you. So what's the hardest part for you about making money in the market? Don't pay attention to everybody else. Just for you, what's the hardest part for you about making money in the market? And by the way, anytime I have a slide that has the word question on it, that's me poking and prodding you, trying to get you to type something into the chat box. So in the chat box, just let me know for you, what's the hardest part about making money in the market? All right, so when to sell, pulling the trigger, selling at the right time, when to sell, not losing money, basically exiting, thank you, Dimitri, following my own plan, good, consistency, selling, pulling the trigger, emotions, we're going to talk about that today. Waiting for the setup, how long to hold, pulling the trigger, selling the losers, what to buy, okay, does the first person say what to buy? Entries, too cautious, having a plan, finding new stocks, great. Great. All right. Now, like a lot of you, I put this webcast together because for a while I struggled, and I talked to a lot of people who struggled in the market. Now, the next few questions, I don't want you to type in the chat box just yet, all right, because it looks like everybody can see what everybody else is saying, but on a piece of paper, on a notepad, just write this number down. All right, what was your percentage gain over the last 12 months? All right, so just write that number down, just one number. What was your percentage gain over the last 12 months, and just write it down. All right? Now, right next to it on the same sheet of paper, and I want to try to keep this part as confidential as possible. I probably wouldn't even, if I were to meet you face to face, I wouldn't even ask these questions, right? Next to that number, what do you want it to be? And try to be realistic. Not 1,000,000%. Just be realistic. What do you want it to be? All right, so now you should have 2 numbers written down. All right, so you should have 2 numbers written down side by side. All right, so now at this point, take your 2 numbers and subtract them. All right, just so if you made 10% last year and you want to be at 30, that's a 20% difference, right? So at this point, just type. Let's type the difference in. That way, it's more generic. All right, so just type the difference. So if you were at 10, you want to be at 30, that'd be a 20 difference. So just type in a difference. All right, so if I was at 10 and I wanted to be at 30, 20, I'd type a 20 in the box. All right, so we got 20, 28, 25, 18. I'm glad nobody put in like 1,000 or 1,000,000%. 30, 45, 45, great. Great. What I want you to think about, think of that percentage as what it's costing you not to have this information. right? If you had this information earlier, I really feel that you could have been at that number months and months ago. And if you're wondering why you're on this webcast today and why you chose this time slot to watch, it's to make that number come true. And I want to make sure that happens for you. All right, so we're going to see how it's done as we go through. All right, so we've got a ton. Take the very best notes you can. So let's start with this. Why do most investors fail? Why do most people fail at investing? And yes, the average investor does fail. All right, take a look at this number. This is, a research study was done showing that 5 years ending in 2012, this was the average return of the average investor. Yeah, some people might, but this is what the average person did. I mean, if you factor in inflation, it's a lot worse than that. So we want to definitely do better than that. So let's first look at the 3 core problems. Right, we're starting with the core problems because it's extremely important that you understand this, or you can never fix things, right? All right, so the first problem is you think of money first. Right? Now you might think, wow, I'm an investor in the stock market. I'm thinking of money all the time. Yeah, I want to make money. But is that true for any professional? Like, do you go into work thinking, hey, I'm thinking of money every second of every day? I always think about this. If I were sitting down in the dentist chair and I looked up and I knew that the dentist was thinking about how much money he was making off of me instead of actually doing the work on my teeth, there'd be a problem. I wouldn't feel great because the dentist wouldn't be doing his job well. He wouldn't be doing his best work. And you got any professional athlete, any good professional athlete. Here's Tom Brady, right? He's thinking about taking the snap. He's thinking about coverages and whatever. Right? He's not thinking about his money. He's thinking about doing his job right, and that's the key point here. Successful people go into work and concentrate on doing their job well. And I want you, if you're going to write down something, let's start with that. So take your pen out, write this down. If you are successful with your job, right? So if you do your job well, you get paid for your good work. The only place where success comes before work is in the dictionary, folks. All right? The point of all this is successful traders don't treat trading like a hobby. They treat it as a job. Just like a dentist, Tom Brady, and all of you who are successful with your job, you think about doing your job well. And if you do your job well, the money follows, okay? So here's something to write down too. All right, I want you to write this down. Your goal is to make the best trades, right? If you make the best trades, the money will follow from that. Take care of the process and the scoreboard takes care of itself, right? Right? As we go through this, when we get to those 5 steps, I'm going to show you how to make those best trades. It's very important you understand this. Not every trade you make is going to be profitable. Right? There's going to be losers mixed in there. Right? There's going to be losers, but you've got to look back at a losing trade and say, you know what? When I made that trade, it was a good trade. It just didn't work out. Right? You don't want to be sitting there kicking yourself and thinking you're a loser just because you lost money. Right? Make the best trades. Right? The second problem is that you trade based on emotion. And this is huge. I mean, it was huge for me. Right? I'll ask you guys in the chat room here. Anybody in the chat room here ever make a trade based on emotion? Anybody make a trade based on emotion? All right, how about this? When was it today? Was it yesterday? Yes, all the time. Yes. Yeah. And most likely those emotional trades probably weren't the best ones, right? Didn't have the best results. I know I've made emotional trades. You think back to the late 90s, right? When all the people were buying in the dot-com phase. People thought stocks would go up and up and up and up forever. Then when they did start to drop, people started to hope that they would come back and fear that they were going to lose money. And basically, those stocks never came back. So why is emotional trading such a problem? Think about it. What happens when our actions are based on emotion? Now think about this guy. The guy with road rage. Do you think his decisions are the same decisions he would make in a normal situation? No. No. When you're making decisions based on emotion, normally do, or what you should be doing. All right? Let's do this. If you see, I'm going to put a few statements here on the board here, and if you see one that you've said, in the chat box, just say yes, or that's me, or something to let me know that you've said one of these. Ready? Have you guys ever said this? I know it's down now, but hey, it'll come back. Yeah, that'll come back. How about, well, it's already down 20%. Onto it now. All right, MC, yes, sure, yeah, me, yep, yes. How about, I have a profit, but man, if I close now, it'll probably keep going up. I know I lost more than I thought, but if I close now, it's just going to go up tomorrow, so I'm just going to hold on. And how about this last one? The last time I sold a stock, it kept going up, so I'm not selling this one yet. Man, you guys could probably see this, but all the yeses and whys and everything in the board here. And these are all statements based on frustration, fear, greed, despair, hope, right? I think I've said every one of those statements. That's probably why I put it on the slide. They were just statements I've made in my past. And they led to poor results. Right? So if you're thinking any one of those statements, like before a trade or during a trade or after a trade, and you might as well just burn your money, right? Because you're not going to be making any money in the stock market. Right, so now, as you've noticed, those first two things that we looked at, they're really all in your head. They're all in your head. So we've got to get our head straight before we can move forward. And when we get to those 5 steps a little bit later, you're going to see that we're going to start off by fixing our head. All right, but let's finish off with the third core problem. Looks like it's kind of cut off a little bit on the screen there. You ignore market direction. Right? I mean, you've probably bought a stock before that was really good. You know, a company that was really good. You know, I did a webcast the other day, and somebody said, yeah, they mentioned like Apple and some of these big companies that make tons of money, and they go down when the market goes down, right? That ever happen? Yeah. Yeah, I bet there's probably people in this room that remember these times, right? The dot-com bubble when it burst, the housing bubble when it burst, and the global financial crisis. Right? Why, let me just talk about this part. These time periods. I remember my dad telling me a story during this period. Well, he actually told me about, I think it was less than a year ago. So he waited a few years after. And he told me that basically during this period, he had his money with a financial advisor, and he lost like 40%. And the financial advisor never talked to him during this period. It was more of like an after the fact, like, oh, hey, by the way, we lost 40%. And I mean, so some of you might have been actively trading stocks during these periods and knew you lost money, or maybe you had it with an advisor and you didn't know you lost money. But either way, during these periods, especially like this one right here, the average mutual fund was down over 40%. The S&P itself was down over 38%. You know, why am I bringing this up? It's because if you don't pay attention to market direction, right? If you don't pay attention to market direction and you lose 40%, you're going to have to gain 66% just to get back to break even. And for many people, that could take years to recover from. All right, so you know, this is looking at the market since 1999. So even though the market, you know, on a daily basis might go up and down, I think you can clearly see that the market has major trends. You know, we hear a lot, oh, you can't time the market. Well, let me rephrase that. What they're really saying is you can't predict the market. And we agree, you can't predict the market. But we do know that the market goes in trends. I mean, if I just, let me get my little pen out here. You could clearly see, look at these are some major trends, right? And even within these major trends, you've got, hopefully you can see my drawing here, some minor trends as well. And even though it looks squished right now, keep in mind, this is months and months and months of this trend right here. So within the big trends is also some little trends. Right? So you need to be aware of these market trends and basically pay attention to them. Right? Now, surprisingly, you don't hear this information from the talking heads on TV. Right? Rarely, maybe even never, will you hear them say, "Oh, guys, hey, go to cash. If you're listening to my television show, guys, you should be in cash right now. Sit on the sidelines." Right? So just keep in mind, you got to be careful where you get your information. Okay? Because it's good for their business if people are investing in the market. You know, someone in a previous session typed in, you know, the advisors and the brokers, they still make their commissions, and so they want people trading. So just be careful where you get your information. I'm going to show you where I get my information in just a moment. All right, so now that we've looked at the three main reasons why people lose money, let's just pause for a moment. And what was your biggest takeaway so far? All right, even if you saw those three reasons and it was more of just a realization, like, yep, that's me, or yeah, I knew those, and it's good to just kind of talk about it. Oh, I'm not alone. You know, what was your biggest takeaway so far? And just type that into the chat box. Let me know how we're doing, so we can kind of keep in this conversation mode, so we can keep moving forward. So, what was the biggest takeaway so far? You know, maybe which one of those three things do you say, hey, that's me? You know, I've been doing that. I need to fix that. All right, so we got head control, knowing the market's trend. Yeah, only a couple. All right, Dan, trade tricks, good name there. Yeah, the biggest ones that I typically see are the market trend and emotion. Yeah, there's another market direction, trends. All right, how are you going to change this? Then not alone in doing them all. Good. Timing the market is possible and essential. Good. No sentiment. I trade emotionally. The mindset. Good. Good. So you get the idea. I like having the, like I said, I don't like just talking to the wall. I like having yeah, over trading hurt me several times. We're going to talk about making a plan for that, Diz. All right. So now that we've taken a look at the problems, we got to get into the solutions, right? You know, what are the solutions to these problems? So let's do this. Let me share with you the 5 steps that you must know before spending another dollar in the market. So these are the steps that all successful investors use. Now, granted, once you become, yeah, there are other things that you could do. Somebody earlier mentioned day trading. Somebody mentioned options. And there's the presentation before I came on was talking about candlesticks, I believe. You know, technical charting. There's a lot of other things you could do. But if you're not making money, or if you're distracted by a lot of different things, focus on the core concepts and get good at them first. These are the core pillars. Okay? So step number 1. Right, this is the first step. We got to take personal responsibility. Right, so if we have been losing or we haven't been as successful as we want, we need to take personal responsibility. Earlier I mentioned a book called Trading for a Living by Dr. Alexander Elder. He relates losing in the stock market to actually being an alcoholic. Right? And the first thing you need to admit to yourself is that you have a problem and take personal responsibility for it. Outside forces. Now, don't say things like, if only the Fed didn't make that announcement, or if only the FDA didn't, stop, that drug from being released, or whatever it might be. Don't blame outside forces. Take personal responsibility and say, yep, my mistake, I got to get better. All right, so before we move on to any other step, first take personal responsibility. Always know that you have it in you to make those errors. All right, Elder actually, and this actually something was really eye-opening for me when I read that book. He actually wrote down, I think it was on a sticky note or something on his desk. And on the note, he actually wrote to himself and he said, I'm a loser. It's damage to my account. just as a constant reminder that he's got it in him to make mistakes. So even the best investors out there have it in us to make mistakes. So always got to be focused. All right? So take personal responsibility. Remember, bad things can happen when we don't make the right trade, or what's the word I'm looking for there? When you think of money first. So what do we want to do? We want to make the best trades. That's our goal. Remember Tom Brady, and here's the investor on the screen. Bad things can happen if we're thinking of money. All right? So step number two, we need to minimize losses. Gains first. They get into the stock market and they're thinking, I'm going to make big money here in the stock market. Big money. But what they don't figure out first is that you got to control your losses. And so we got to control our losses. So if you were to look at your trade history, a lot of you probably are, probably finished your taxes from last year, or maybe just finishing them up. I mean, if you took your trade history from last year and sorted it by the biggest gain to the biggest loss, there's probably a couple of trades at the bottom of that list that you wish you had back, right? That maybe just got away from you. And if those trades never happened, or let's say you cut the losses a lot sooner, most likely your portfolio would be okay. All right, so if that happened to you, I mean, hey, you can let people know that they're not alone. Say, hey, yeah, I had a couple of those. Yes, that's me. Yeah, we need to minimize our losses. Why do we need to do that? Survival. You need to make sure you didn't live to fight another day. You need to make sure that you're able to live to trade another day. Now, if you allow yourself to lose too much on each trade, you can only have a few losers in a row before your portfolio is just crippled. All right? Remember what I said before. Not every trade you make will be profitable, so you need to ensure your survival in case you run into that string of a few losses. All right, so in order to minimize losses, we need to establish what's called risk management. All right, so here's a couple of guidelines. Ready? All right, so if you have that pen and paper out and you kind of looked away for a second, let's get back involved. In a moment, I'm going to ask you to do a little work with me, a little assignment, let's call it. All right, so risk management guidelines. There's two of them. You ready? Risk guideline number one: never lose more than half your profit. Some of us, or most of us, have been there, right? We've entered a trade, had a nice profit, and for one reason or another didn't sell it. The most glaring one for me was years and years ago. I had this option trade, right? And I think it was about a week into it. I think I had 3 months on this option trade. I was a week into it, and I was like up 80%, something ridiculous like that. And I'm like, wow, in 1 week, this is great. And I'm thinking, imagine how much I'm going to be up after 3 weeks or 2 months. Well, it didn't quite work out that way. And eventually, what happened to me probably happened to you guys too, is you watch that profitable trade turn into a loser, and sometimes they turn into the biggest losers that you've had for the year, because you hold on to them thinking, oh, they'll eventually turn profitable again. Well, our guideline is to never lose more than half your profit. Now, that doesn't mean that good question. Thank you for asking that one. That doesn't mean if you're up 10 bucks, right? Oh, wow, I'm up 10 bucks, and then it drops to 5 bucks that you should go get a Happy Meal at McDonald's, right? What we say is first start with an objective, and we say like 10%, right? So if you're up 10% and then you see that drift back and now it's only up 5%, that's a good starting point, at least to get some discipline mixed into your trading. All right, so if you're up 10% and it drops to a 5% gain, walk away with at least that 5% gain. You don't want to be kicking yourself because you watched it turn to a loser. All right, now the second, we need to limit our loss to no more than 1% of our total capital. Now this part usually confuses some people, so this is the one where we're going to do an exercise. All right, and what I'm going to do, some of the questions that are coming in, we're going to hang on to some of these until we get to the end. We're going to have a little time for questions there at the end. So if I can, I'll address them as we go. So limit your loss to no more than 1% of your total capital. All right, you ready? Let's do this. Get a clean sheet of paper. And I happen to like the green color. So let's do this. Just draw a line going across the top. And if you're like me, I'm very anal like this. You know, I like to plan out my piece of paper ahead of time. So if you're like me, you know, just so you know, there's going to be 4 columns eventually. All right, so you can plan ahead. Maybe you're not like me. Maybe I'm the only one who does that. All right, so I like to have all my columns the same width. I don't know. I'm anal like that. Anyway, so the first box, this is going to be our account size. Forgive my handwriting, folks. All right, this is our account size. All right, now I'm going to use a nice round number, but on your sheet of paper, I want you to write your account size. So I'm just going to use a nice round number of 100,000. So if you're and I'm not talking about your net worth here. I'm just talking about your trading account, what you actively trade with, stocks. All right. So if you have a $10,000 account, 50,000, 1 million, whatever it is, write that number here. All right. So far, so good. Next column. Let's figure out what 1% of that is. So help me out, folks. I didn't bring my calculator. What is 1% of 100,000? So, Brian, you get a faraway high five. Even though we spell our names differently, I'm with an I. Good, 1,000, right? All right, so 1,000. All right, so that doesn't mean that you can only invest $1,000 in each stock. All right, so that's not what that means. It means we can only risk losing $1,000 on each trade. So then the next 2 things you need to ask yourself would be, all right, knowing that, how much will I invest per trade? And what will my stop percentage be? All right, so let's say out of our 100,000, we want to put $20,000 into one stock. So I'm going to go buy stock XYZ, and I'm going to put 20,000 into it. To follow this guideline of only risk losing 1% or 1,000, what do we have to enter with our broker as our stop loss? So type that into the chat box. What would our stop percentage have to be? All right, Ames, we got a 5% listed there. 5 from NAG. 0.5. Yeah, David, yeah, 19,000 is what we would allow it to drop to. 5%. So on a percentage basis, we're saying, all right, I'm going to have to close out of this trade if I lose 5%. Well, some people say, well, 5% is a little too tight. I don't want to use 5%. Well, you have options, right? You don't have to just walk away and say, I'm not trading this stock. You could say, all right, well, I'll invest only 10,000 instead. And then that allows you to move to like a 10% stop. Or even still, you can say, well, I'll only invest $5,000 in that stock. Right? So then you could go all the way up to what? 20, right? So you got to think about these things to ensure your survival. Right? Doing this type of an exercise also has an added benefit, folks. You feel like you've got more control over your trades. All right? You're controlling your emotions, basically. Most of the time, emotions really come into play because you're risking too much money on a trade, like money that you don't want to or can't afford to lose, and you're just freaking out because you think you're going to lose it. So if you have risk management under control, and by doing this, you're going to have more control over it. You're taking emotions out of play. All right? So just always keep in mind these risk management guidelines so that you can ensure your survival. All right? A mentor of mine put it this way. He said, and this is Kevin Crowe I'm talking about. He's the guy that helped me out. Basically said, hey, Brian, some people think about how great life is going to be like when they retire. Right? They're thinking about their toes in the sand on the beach. But what a lot of people don't think about is, or what a lot of people don't realize is they're not ever making it to that finish line because they're not employing proper risk management. Right? Because basically by not doing that, their trading account just gets wiped. All right, so yeah, emotional trade. Thank you, Carlos. Emotional trading can be very destructive. All right, so quickly, I'm going to give you about 10 seconds to type this in. What's your biggest takeaway so far? Was after this, we're going to get right into specific stock stuff. Those were more techniques on portfolio management and some mind exercises. So next we're going to get into more stock market. I always like to phrase it as we're adding layers to our sandwich of knowledge. All right. So what's our biggest takeaway so far? What do you need to do? You know, maybe have you been doing that? Yeah. All right. Control the risk. Don't lose money. Or let's just maybe put that another way. Don't lose too much money. All right. Know how much you're going to lose. Good teaching. All right. Maybe that was to me. Good. Like the risk management exercise. Good. That was, that's a great exercise. I love doing that. Be objective. Minimize loss. Excellent. All right. Now our third step. Ready? This is the one actually most investors forget about. Now without this step, guys and gals, everything else could fall apart. All right, so step number 3, make a plan. And look at the words I have in caps there. Write it down. All right, by writing it down, you're much more likely to follow it. If you just keep your plan in your, it's so easy to just kind of say, well, nobody really knew I had that plan, so I'm just going to hold on to that stock just another day. Let's give it another day and see what happens. All right? You need to know exactly what you're going to do prior to entering any trades. I mean, if you think about it, when you get on a plane, right, before you even take off, what does the flight attendant do? Like, she's standing up there saying, all right, there's exits over here, there's exits over there, kind of look around, find yours, right? So basically, before you take off, you know how to get off the plane, number 1, in case there's an emergency. Number 2, in case things go right. You know how to get, leave from the door you came in which, or whatever preposition we're going to throw in. Sure, I'm throwing around these prepositions like they're candy. All right, so you know how you're going to get off that plane. All right, but you got to have a plan and write it down. Whatever you choose, right? Some people, you got all these iPads and whatever, you might go digital. After many different ways of doing it, I basically, in my little, let me open it, in my backpack here, I carry it around with me all the time. I'm now in a composition book, and I found this is the best way for me. On page 1, I've got the plan written down, and then on all these other pages, I just write down in detail each stock trade. All right, so whatever works for you, but write it down. Okay? Your plan should have these 3 components. All right, when to buy, what to buy, and when to sell. And actually write them down. Now, before we get into the specifics of each of these 3, which one in the chat box, which one is the most difficult for you? Or which one is the most difficult for you? When to buy, what to buy, or when to sell? Which one is the most difficult? All right, so we got when to sell, sell, sell. So we have 3 sells in a row. What to buy, 3. What to buy, then sell, sell, sell. What, sell, sell. When to buy, what to buy, sell, 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 sell. What to buy, same. When to buy, sell. So it looks like, if I did my math right, it looks like it's probably about 60 to 70% on the sell side, and then the other 2 looked fairly close. Right? So, and that's true for a lot of people. This when to sell is the most difficult. Now I'm going to talk about all 3 of them. I'm going to help you out with each one. So we're going to start off by looking at a high level, and then we're going to get pretty specific, okay? But you've got to make a promise. Don't make a promise to me, but make a promise to yourself that you're going to write down your trading plan. All right, and that PDF, that freebie that I'm going to give you at the end is going to help you do that. All right, just remember, let me skip past that. This Chinese proverb says, the faintest ink is better than the best memory. All right, so just write things down, okay? All right, so let's, again, start off high level, and then we'll get more specific. So the first part of any plan should be determined. The first part of any plan. You should answer the question, what's going to trigger me to enter the market? All right, so you want to have a market timing signal you can trust. You got to trust it, or else why have a plan in the first place? So this timing signal to enter the market, it needs to tell you when it's a good time to be buying stocks. Don't base your decisions on what the talking heads are talking about on TV. In just a moment, I'm going to show you the exact signal that I use. All right, so that's high level, when to buy, what to buy. You want to answer these questions. You want to answer what's going to trigger me to enter a trade. I listed a couple of examples there. There's a lot of different things that you could put in there. You know, you could be a technical trader and use MACD. You could use some of those candlestick formations, right? You could be more fundamental and look at earnings and look at rising price. We're going to talk about criteria to use in just a minute. Also ask yourself, how many stocks will I buy at once? You know, am I going to have a 10-stock portfolio? Will I buy one stock at a time, and so on? And how much will I invest in each stock? And you get that answer by you doing that risk management exercise we did a moment ago. And then finally, you got to know when to sell. Right? And this, for a lot of people, is the most difficult. Right? You got to write down the rules, which will tell you when to sell. Right? What's going to trigger you to exit the market entirely? Is there a signal that will do that? What will be your stop criteria? And again, you could use that risk management exercise we did a moment ago. And have a profit target. You know, what's your profit target going to be, and what are you going to do when it's hit? You know, I put an example there. Maybe if you get to 30%, you'll sell half your positions and then tighten your stops on the remaining shares that you've got. All right, so now let's get into some more specifics on what to do for each of those steps. And I actually like to start off with the middle one of what to buy. So step number 4 is going to help us with the what to buy. Okay. Yeah, Carlos, actually, remind me when we get to the end. I'll go back to that slide in just a second when we get to the end. All right, plus, I'll have actually the freebie at the end will give you that information as well. So stick to the end. I'll give you a link to that. Okay. So step number 4 is to buy safe, undervalued stocks rising in price. Now, many investors actually get taught that it's good to buy stocks on their way down. You know, people might say, well, they're cheaper, right? Well, we've learned that you should not only buy good stocks, but buy good stocks that are rising in price. You know, rising in price. They're the stocks that are doing what you want them to do. In fact, our founder, Dr. Bart DeLito, the founder of VectorVest, he puts it this way. He says, good portfolio management starts with buying the right stocks. And he actually has an analogy of a baseball team. And he says the GM, his job is to find the best players that he can afford. And then the manager manages those players to get the best results. Well, guess what? You don't have a GM for your portfolio. You actually play both roles. You're the GM and the manager. All right, so you've got to find the good stocks and manage them well. Okay, so let's take a look at this. This is probably one of the most rhetorical questions I might ask you. So here's a team over here that's a farm team, right? A minor league team, and here's the New York Yankees. I think a lot of people know them. They're they always spend a lot of money, get a lot of great players, right? If you put just the players alone on the field and had them play a full season, the Yankees would do better, right? Just the quality of the players alone. And then if you put a good manager in there, they'll do even better than that, all right? So in other words, what I'm trying to say here is if you have a portfolio of really good stocks, just having those good stocks alone in your portfolio will help your portfolio do well. All right? After that, it's all about knowing how to manage them. All right? So keep this in mind. We're going to find the best stocks of the portfolio and manage them well. All right, so let me share a great little checklist to do this. All right? And remember, we're getting good. Let me say this another way. We're getting good at one thing. We're going to get really good at doing one thing really well. And granted, there's other ways that you could trade, other techniques. Let's get really good at one thing. So if you want a good technique for finding stocks to make money in the market, before buying any stocks, make sure that the stock price is steadily rising and it's not volatile. Make sure the company is making money and growing their earnings. Favor undervalued stock. All right? So we're going to actually look at all 3 of these. All right? So let me just skip ahead looking at the clock here. Here's 3 charts. Now, here's 3 charts. If I were to only let you choose one of those 3 to buy today for your portfolio, which one of those 3 would you choose? All right, and maybe you can even put in why. All right, so I got 3, 3, 3, 3, 3, 3, 3, 3. Wow, look at this. Everybody's picking 3. Everybody's picking 3. Oh, there we go. A couple of people picked 1. And then 3, 3, 1, 3, because it's steadily rising. 1, 3. Okay. All right, good. We're talking about 3. And why? Now remember, we're not talking about, like some people were talking about day trades and such. But if we're looking at these charts, the key thing is what you see is what you're most likely going to get. All right, so what we're looking for is stock prices that are steadily rising and that aren't too volatile. All right, I like to call it the sleep at night factor. All right, I want to make sure that I can go to bed at night and not worry that my stock is going to do this overnight. All right, so we're looking for prices that are steadily rising, that aren't too volatile, so I can sleep better at night and having them in my portfolio because it's doing what I want. A lot of people see number 1 and they're like, oh, this is a bottom fishing opportunity. Well, guess what? If I back this graph up, it might have been a bottom fishing opportunity any point through here. Was it? They might say, oh, well, it's low here. Well, it could have been low here, could have been low here, could have been low here, and now it's down here. All right, so it just kept moving lower. What about this guy right here? Some people buy a stock thinking, oh, I'm going to buy it here, and it's all this volatility that was back here. After I buy it, guess what? Smooth sailing, baby. Well, granted, over time, maybe it'll go up. But guess what? This is what the ride's going to be like. And you got to ask yourself, can you live through that ride? All right, so what we prefer is buying stocks that are already doing what we want them to do, rising in price. Okay? So that's part 1. Part 2 is we're going to mix into there looking for rising earnings, because rising earnings, companies that are able to grow their earnings, that drives the stock prices higher over time. We found it to be true time and time and time again. Think about it. If I had a company, I came to you and I said, hey guys, and my company loses money every year. Would you like to invest in my company? You'd probably laugh at me and walk away. Think about the stock market too. If you want to buy, you'd only want to invest in companies that grow their earnings because they're going to become more profitable. They're able to put their money back into their own company and grow it, make it better. Their stock prices tend to rise over time. All right, so earnings is the engine that drives stock prices higher over time. So that's why I put earnings per share down here at the bottom. And the third thing is you want to favor undervalued companies. All right, so this is not, the first 2 are the most important of the 3. Now this one, you do want to favor undervalued companies because over time, price goes to meet value. All right, so you want price to be undervalued in an ideal, you want it to be undervalued in an ideal situation. All right, so think about it. You got 3 things working for you. Steadily rising price, steadily rising earnings, undervalued. 3 things on your side. All right? So, before buying any stocks, use this checklist alone will help you become a better investor over time. All right, keep in mind, we're not talking about trading and getting in and out in tomorrow. We're here to fix a portfolio and help you become a great investor over time. We want to get to that finish line and make money. All right? Quick quiz question. Anybody here? Probably people from overseas might not know. I'll give you 5 seconds. Anybody know? Far away high five to anybody who gets it right. Anybody remember who this guy was? He had a show on Nickelodeon. Chris says grandpa. Nope, this is Mr. Wizard. All right? He had a TV show when I was a... All right, he was on Nickelodeon. Right? He had a television show, and basically he taught kids all different cool science stuff, right? And on one episode, he took this little boy, right? He challenged this little boy, and he said, hey, I challenge you to lift up that car with one hand. And of course, the little didn't think he could do it. He's like, come on, Mr. Wizard, I can't lift up the car with one hand. Until Mr. Wizard taught him, hey, you could do it with one hand using this jack. And he taught him how to use leverage. All right, he taught him how to use leverage. And I didn't know it at the time, but that's actually a great lesson for us as traders, right? When you do all the work on your own, the task is so much more difficult. Make your life easier and leverage off others. That was one of my major learnings. Doing this on my own was basically like its own full-time job. Now I just leverage off the analysis done by others. Huge time saver, much better results. And in a bit, I'll show you how I do that, how you can access that same information I use. All right, so step number 5, earlier we talked lose money because they ignore market direction. So if ignoring market direction makes you lose money, guess what? You need to make sure you trade with the market. We like to refer to this as riding the wave. All right, for NAG, for those of you who are saying you're short-term traders and maybe even day traders, you still need to make sure ride. All right, even if it's on a day-by-day basis. So we want to trade with the market. All right, so if the market, like I said, we like to refer to this as riding the wave. So if the market's going up, only consider buying. If it's falling, don't buy. Instead, consider selling. Right? Because 75% of stocks go in the direction of the market. By trading with the market, you're putting the odds of success in your favor. Right, so here's a look at the market since '99. So you want to make sure that you've got a system that allows you to determine the market's direction. Now, some people use things like moving averages on the S&P 500. I personally use guidance from VectorVest. Whatever you do, I just suggest you don't listen to the talking heads on TV. All right? Instead, you should have a system that's not emotional, which is based on empirical data and has a historical track record. And guys and gals, the talking heads on TV meet none of those criteria. Now, one of the things that we noticed was that when the market moved in a direction for 2 weeks, it typically would continue in that direction for some time. Basically, let's just say a Monday to a Monday to a Monday. All right. Sorry, guys. That kind of looks like a butt. Sorry about that. But you get the idea. Monday to a Monday to a Monday. Not a butt formation. All right. So let's look at a few major moves. I wish we had more time to go over market timing here. But, I mean, I think the biggest game changers in all of our lives were this one, the dot-com bubble. Where is it? This one here and this one up here. Biggest game changers for us. Big down move, big down, and a big up, right? So let's look at those. All right. So what I did is I just zoomed in on the dot-com bubble. So this is just a zoomed in portion. All right. So this was definitely a game changer for a lot of investors because in 1 month, the NASDAQ dropped like 30% and then dropped another 50% by the next year. So here, VectorVest signaled the confirmed up call. So that's what we call it, a confirmed up signal, back in November of '99. So yeah, you could, during that time, be buying stocks and making money during that upturn, right? Now here on March 20th of 2000, that's when we issued a confirmed down signal. That was the same time the talking heads on TV were still saying, buy, buy, buy. All right? In addition to those rules-based signals, those are purely rules-based, we also had guidance in our newsletter. Right here, this is March 17th, which was basically right here. I wish I drew that arrow better. In our newsletter, we said, or Dr. DeLito, our founder, he wrote in there, I believe that the rally is exhausted. Downside risk outweighs upside potential. Prudent investors should protect profits and take defensive actions such as buying puts. Consider any rallies as opportunities to sell stocks at higher prices. All right? I mean, before I said I'm going to guarantee that if you follow the 5 steps, you will never experience a portfolio collapse. If you're following these signals and exiting the market with these, you will never, ever, ever see a portfolio collapse. I mean, think about the money that this would have protected you from losing. All right? Let's move forward. It's global financial crisis here. So you can't see it on the screen. It looks like it was cut off. But there is a red arrow right up here, kind of cut off on your screen. It's up there. That red arrow, that down call was November 1st of 2007. Then we had another confirmed down signal here, and that was in June of 2008. And that was before the global financial crisis really kicked in, right? Now we also had a confirmed up signal here. I actually made some pretty good money here in 2008. Yeah, this is all 2008. There's these signals here. So once again, let's take a look at the written guidance by Dr. DeLito. Now here on November 2nd, 2007, which again was right there, he said, the confirmed down signal that we received yesterday could be the entree to a long bear market. We're not there yet because earnings are still rising according to our method of analysis, yet we no longer appear to have the support of an accommodative Fed. It can make things very bad for the stock market. Don't be deceived by the endless parade of experts who appear on TV and other places telling you to buy stocks. All right? This is not the time to be buying stocks. Great advice, right? Then let's take a look at this one. The market bottomed here in 2009. We issued a confirmed up signal on March 26, 2009. The market had its biggest rally in like 70 years. Then there was a short pullback and then another confirmed up call in July 2009. And as you can see, prior to that market bottom, we also had a confirmed down signal here. All right. So think about what we're getting. You might be looking at this thinking, oh, well, Brian's not going to circle that other red arrow that I see there on the screen. Well, yeah, I am. We had a down signal there. Some people say, oh, well, you had a red arrow there. Yeah, that's a confirmed down signal. So what, right? Not every signal, let me say this, no market timing system is perfect, right? Once in a while, something like that will happen. You know, if it does, big deal, right? If you get out here and you get back in here, great. You're able to take advantage of the next up wave. What you don't want to have happen is ignore one of these and watch your portfolio drop 20, 30, 40%. Okay? So think about what you're getting with these signals. You're getting protection and opportunity. And you know what I was saying earlier, you're going to protect your portfolio from a collapse and have frequent opportunities for substantial gains. Okay? All right, so now I want to show you something pretty cool. I just drew like crazy all over the screen. Let me show you that written guidance. Here on March 6, 2009, Dr. DeLito wrote an essay called Itching to Rally, where he was saying, hey, this market is just itching to rally. Then later on in the same essay, he said, aggressive investors, be alert to an explosive rebound. And then 2 days later, basically that first day off the bottom, we went long in our model portfolio. All right, so you need to pay attention to market direction. All right, you need to make sure you're on the right side of the market's trend. All right, now this guy right here, this is Russell. I met him when I was in Australia a couple of years ago. Now he recently shared a story with me. Russell, when he was 28, he had saved up a sizable sum of money. He wanted to improve his nest egg before putting a down payment on a house. And like many investors, he was excited, eager to get into the market, make some money because his money managers were only getting him about 6% a year. And he said initially he was doing well, but he was buying into a bull market. He had no idea about market timing. And then he soon watched his portfolio, which he had 4 years worth of savings built up, go up in smoke. He said emotions of fear, hope, and greed had taken over his ability to think rationally. He had no system. He said he had no methodology in place for when things got tough. He said he actually hit bottom. He was depressed, angry, ashamed. He felt helpless. And he actually said he was too embarrassed to admit this to anybody at the time. He actually contemplated giving up on the stock market altogether and moved to real estate. And he said to me, he's thankful for that experience. He vowed never to have his portfolio unravel again, and he promised himself that the next time he went into the market, he would have the upper hand and have the right tools. Well, he told me that his father then came to him, and his father actually had a similar experience, but his father introduced him to VectorVest, and he found a system that worked for him. It all started to make sense for him, and he says now he's making money consistently for the first time in his life. And all he did was follow the 5 steps that we looked at today. And the key he learned was that he needed to leverage off others. All right, so he showed up today for a few reasons. All right, maybe you showed up at this webcast specifically because maybe you've been losing money in the market and you wanted to learn why. Maybe you just wanted confirmation that you weren't alone. Maybe you wanted to learn the steps to take to prevent that. But maybe you're doing okay right now. You just want to get better. But even if you are doing okay right now, think about how much money you could/should be making. And based on the percentages that we looked at earlier, many of you are not where you want to be. In addition, I hope you also learned a few things. How extremely it is to know the market's direction and trade with the market. I hope you also saw that it's possible to make sure that your portfolio is never on the wrong side of the market for more than 1 to 2 weeks using those confirmed calls. I also hope you saw the importance of getting accurate information about the market and about the stocks that you're interested in, and how extremely important it is to leverage off of others to make your life easier. And right at the start, I promised I'd give you everything I could, and at the end I'd show you a system where you could take all the things that we just covered and plug them right into your own investing and get results faster. So, that brings us to the obvious thing you should be asking yourself right now, and that's how do I create this type of portfolio or this type of system in my portfolio right now? Well, I reckon you have a choice. Well, you could choose to continue to try and do all the things on your own. Maybe put some things that we learned here today, put them together and learn by trial and error. Mistakes can be very costly, though. You can choose to do what I did and what Russell did and what his father did, and that's use a service that gets you right to the solution. Why do all the your own when there's a service that has already done most of the work for you? A service that's used by tens of thousands of people across the world to help them make money in the stock market. Now, I need to point something out. All right? Albert Einstein said everything should be made as simple as possible, but not simpler. And it's important that you understand that this is not a get-rich-quick scheme. All right? It's not something where you should expect results in 24 hours. It's for serious people who take their trading seriously, who are willing to put the time in to learn the system. This is why VectorVest was created and why we put together this portfolio management system for you. It's for serious people who want a simple way to buy the right stocks at the right time and know when to sell them. All right? We've broken it down into several components. All right? We've broken it down into several components for you. Let me go back to that. When to buy, what to buy, and when to sell. All right, so we've got a great opportunity for you today. I'd like to tell you about it. The first component, right, number one, is all about when to buy. All right, with this component, you'll be able to know the direction the market is trending. So whether you're aggressive, prudent, or conservative, it provides you with very clear entry points in the market. All the guesswork will be removed, and you'll know when it's safe to buy stocks. All right, component number two is all about what to buy. With this component, you'll be able to quickly identify the stocks that have rising earnings and steadily rising prices. We track over 8,000 stocks. We analyze them, we sort them, we rank them so that you don't have to. And the stocks with the best combination of value, safety, and timing are at your fingertips every single day. Enormous time saver. Component number three, all about when to sell. With this, you'll be able to know when to sell a stock and when to exit the market. Each and every day, we give an unbiased buy, sell, and hold rating on each stock. In addition, you get when to exit the entire market. Right? You get very clear signals when it's not time to be buying stocks and when you should take or protect profits. Remember, these signals are the ones that help protect our subscribers and protect their nest egg during the most horrific collapses in the market. Now, folks, those tools alone provide you with the information you need to know when to buy, what to buy, and when to sell. We also provide what many people feel is the best part. That's pre-built trading plans. We've put all the pieces together for you, and with these plans, we've done everything for you except to actually go to the broker and place the trade. These trading plans detail exactly when you should buy, exactly when you should sell, and exactly what you should buy. Right? We actually display these in our model portfolios for you every day. And I got a couple seconds here. Let me just quickly show. Here's our program. Here's one of our model portfolios. You can actually see the stocks in it. You can see when we make trades. Here's the performance over the past since January 2013. Here's another one, and you can see the exact stocks that we've got in there and the percentage gain that we've got, so you can follow along if you want. All right. So over the past two years, they've averaged between 30 and 50% per year. All right, now guys, this is all about knowing. Well, it's actually all about getting the results not just knowing, but getting the results that you want and getting it quickly. So in 30 days, you'll be able to turn your portfolio around guaranteed. You're going to get those very clear signals when to enter and exit the market. So you always know when it's safe to buy stocks and when you should exit the market to protect your nest egg. You'll have safe, undervalued stocks rising in price at your fingertips. You'll get buy, sell, and hold ratings every single day, pre-built trading plans. You'll get real-time streaming data. All right, over 15 years of historical data. If you want to buy it all on its own, it's typically $137 a month. A few bonuses for you today: a one-on-one consultation session to get you started right away. Just give us a call, ask for that one-on-one consultation session. We'll help you analyze your portfolio and get you started. That's typically $95. We're going to give a bonus of an auto timer plug-in module, which is typically $495. Right, with this module, you can plan and have it running automatically. It'll tell you, hey, place this trade, and then you just go to your broker and place the trade. Bonus number 3 is all coaching, ongoing coaching. You're going to be invited to our group coaching session, which is held every 2 weeks for real-time subscribers only. All right, so every week or two, we'll get on a webcast like this. And basically, anything you need help with, I'm going to give you tips, techniques, anything you need help with, I'm there for you. These 56 days is valued at $380, but it's included today. Now, this is the type of comment we typically get from the people who have been to a coaching session. It says, learning to take the emotion out of trading, plan the trade, and trade the plan. It's been the most successful for me once I decided to stop listening to all the market chatter, believe and trust in VectorVest 110%. So you're going to get VectorVest real time, the constant auto timer, 56 days of coaching, total value over $1,100, all for only $137 for your first 60 days of access. And we've put the link chat box there. Simply go to VectorVest.com/betterprofits. This offer is only for the next 60 minutes. All right, so if you go to VectorVest.com/betterprofits, it's in the chat box. It's only good for the next 60 minutes. And by the way, it's guaranteed. For those of you who are new to VectorVest, either on a trial with us or new to VectorVest, hey, if you don't like it during the first 30 days, we'll give you all your money back. All right? This gives you that peace of mind. All right? We've just met. You and I have just met. I want to make this a complete no-brainer for you. You're going to be able to turn your portfolio around in 30 days guaranteed. All right? So if you don't like it in 30 days, we'll give you all your money back. And hey, you're not locked into any contracts with us. VectorVest was started in 1988 with the hope of delivering great investing and trading opportunities to Main Street. Today, you're invited to join VectorVest. You'll have a simple and effective way to manage your portfolio. You'll know when it's safe to buy stocks, easily find safe undervalued stocks rising in price, save enormous amounts of time. Wealthy people spend money to save time. Poor people spend time to save money. One of the huge benefits of this is we put all the tools you need in one place to save you a lot of time and protect your nest egg. It's the best insurance policy for your portfolio. Ask if what I showed you today would have saved you $137. All right? Full guarantee. Got to go to VectorVest.com/betterprofits in the next 60 minutes. Earlier, I asked you what your gain was over the last 12 months. Then I asked you where you wanted to be. Remember if that percentage that you wrote down is equivalent to more than 137, let's fix for all. Make it so you never have to experience a 2008 ever again. Make it so 2014 is the year you turn things around. All right, so go to VectorVest.com/betterprofits to get started right now. We'd love to see you with us. We look forward to working with you. And until they kick me out, I'll try to answer as many questions as I can. It looks like I went over a couple of minutes. So if I'll stick around until Morgan comes in and says, all right, time's up. And, oh, by the way, the freebie, thanks for sticking to the end, by the way. Number one, thank you all. It's been a pleasure being here today. Thanks for inviting me here. It's been a pleasure. I love talking about this stuff, so that's why I go long sometimes. The freebie is VectorVest.com/plan. www.vectorvest.com/plan. That's your freebie. All right. So you can go there, and we'll put that into the chat box too. So it looks like I'll stick around for a few extra minutes for some Q&A to help you out. Leave this slide up here so you know where to go. So let's see. So If I missed your question, just go ahead and type it back in, because sometimes as they scroll through, they go back up to the top. I know Angel, she's here with me today. She's been helping answer some questions in the chat box for me. So, hey, Steve, you're welcome. Deborah, you're welcome. Can I extend my current plan for 60 days at the 137? I'm on real time. Hey, Richard, do me a favor. Do you have, just put in the chat box if you know our phone number. Trade Tricks, 12:37 p.m. Trade Ticks. Is this day or in swing trading? Yeah, well, not necessarily. I wouldn't say VectorVest is geared towards day traders. We do have a real-time service, which you can use for the information and the graphing, but it's not necessarily geared for day traders. But yes, swing trading, longer-term trading, yes. So days, weeks, months, but maybe like minute by minute, maybe not. There have been a lot of trades that I've actually closed out within a day, but I didn't necessarily go into those trades thinking I was going to be a day trader. All right. Trade Tricks, freebie link please. Did I just say please? Hang out with my children too long. The freebie link, hey, Yana, can you type in the freebie link, which is vectorvest.com/plan. Right, vectorvest.com/plan. That'll bring you to a PDF that you can download. It's a little freebie for everybody. Thank you, Yana. Now let's see. Where is the link, please? We're typing in the chat box, and there's one that popped up. So vectorvest.com/betterprofits. If you go there, you can take advantage of this. Guys and gals, we have our next coaching session next Wednesday, and we're actually going to be focusing on trading plan development. All right, so let's if you become a real-time subscriber today, you can get in for that next coaching session. Diane, you're welcome. Let's see, is it open for a current subscriber? Hey, Patsy, I think we met before. Yeah, just I would say I'd hate to. Usually I ask for you to put in your phone number in the chat box, but everybody else will see it. Do me a favor, and how about this? Anybody who has specific questions about your subscription, let me put my email address in here. Just send me an email. So briand@vectorvest.com. All right, just send me an email. So Patsy, you can give me shoot me an email, and that way, and you can give me your phone number via email. And we can take care of it that way. Current directional call in the market. By the way, here's a little for people. Our longer-term signal is still up, but our shorter-term signal has been down for the past few days. So there's a quick little peek at VectorVest there. All right. Let's see. No, we don't have PayPal. Sorry, Joe, but we accept pretty much everything else. So you can do credit card. That's the most popular way. Hey G, thanks for the comment there. Great session. Does VectorVest analyze ETFs as well as stocks? Definitely. I think ETFs have become so popular, Michael. We actually track. Hold on, let me show you here. We actually on the wrong link here. Viewers. We have a whole section just for ETFs, and I think there's like 1,500 or 1,400. There it is. Just about 1,400 ETFs that we track. All right. I wouldn't say that we're similar to InvestTools. No. I think it was apples and oranges there. All right, so it looks like I'm getting a note that the next one's coming in 3 minutes. So I think what I'll do, I'm going to close this down. Again, say thank you to everybody, as that way you guys can take a break and get that next presenter in and ready to go. It was a pleasure doing this. We look forward to working with you. Thank you to everybody who's already ordered. We put the link in the chat box again. So again, it's good for the next, I don't know, it's probably 45 minutes now. So thank you, everybody. You're welcome, Diz. Look forward to working with you, and we'll talk to you soon. Bye, everybody.